Hello, this is Jamin Kirkwood from Secure Financial Management with your February 2016 Educational Economic Update. In this video, we'll talk about some of the economic events that influenced markets last month and give you some insight into what they might mean for you as an investor. And please stay tuned at the end for a required disclosure statement. Well, the start of 2016 for the equity markets may be described as rocky at best. Stunted by receding oil prices and a plummeting Chinese stock market, stocks have hit the skids in a big way. A late month rally fueled by an about-face in oil prices, some favorable earnings reports, the prospect of further stimulus from the European Central Bank, and Japan dropping interest rates to negative numbers, spurred stocks higher towards the end of last month, but not enough to lift each of the indexes out of negative territory year to date. The Russell 2000 and NASDAQ still have the most ground to make up and get even, while the large cap Dow and S&P 500 are still off their values from the end of 2015. Citing slower economic growth since its last meeting, the Federal Open Market Committee voted to maintain interest rates at their current level. While noting positive economic trends in labor, household spending, and business fixed investment, inflation remains below the FOMC's target rate of 2%. While net exports continue to be soft, a strong dollar and lower oil prices slow growth in the fourth quarter of 2015 to 0.7%, following a 3.9% and 2% growth rate in the second and third quarter. 3 months into the US government's fiscal year, the government's deficit is on the rise, up 22% to $215 billion for the month, according to the US Treasury report. Part of the increase is due to the timing of outlays, without which the deficit would have been up about 5%. However, disbursements for Medicare and Social Security are up a combined 7.1% compared to this time last year. Amid an apparent economic slowdown, China's equity markets were slammed earlier in the month as money left the country, prompting the government to take steps to discourage the monetary exodus. The rest of Europe withstood China's lagging economy, helped by the prospect of more stimulus offered by the European Central Bank. It's been a tough start for the equities market, both domestically and globally. Much of the early market decline has been in reaction to China's apparent economic slowdown and falling oil prices. Nevertheless, the markets did rebound at the end of last month following escalating oil prices. In any case, the presidential primary seasons kicked off this March, which may influence investors' tendencies going forward. Well, that's it for the February Educational Economic Update. As always, if you have any questions or concerns about what we've discussed, please give our office a call at the number below. Once again, this is Jamin Kirkwood with Secure Financial Management signing off for the month of February 2016. Now, please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give the office a call at 210-428-6250. We'd be happy to speak with you. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as an investment advice or a solicitation for the sale or purchase of any security. Please consult your financial professional before making any investment decisions.